Hey guys, hope you guys are doing great. My name is Gino Taraboto. I'm a real estate agent in South Florida, New York City. I've had the privilege of helping clients with buying. I've visited the sellers, renters, companies with finding office space. And obviously one of the biggest goals for many of us is to own real estate. And so I wanted to share with you some of the most common ways on how you can buy real estate. Obviously the most common, most desired one is cash. Few contingencies, you're probably the most desired type of buyer, and it gives you a lot of room for negotiation because, well, it's cash. The second one is a mortgage. You get a loan from a bank, for example. It can be VA, FHA, conventional. Each one has its own requirements to have you approved. And the third one is seller financing, which is the one that I wanted to delve in deeper in this video. I love seller financing. I think it's one of the most overlooked options for many buyers, because a lot of times we know that we need typically a large down payment, we need pretty good credit score, and sometimes many of us may have one of the other. Like, we may not have such a great credit score, but we may have a pretty good income, or we may have a very good income, or we may not have such a huge amount of savings for a down payment. So if this is your situation, you shouldn't feel disgruntled, because a possible solution is to consider seller financing. Seller financing is basically like a mortgage, but instead of going to the bank to hopefully get you approved, you go to the seller. And you go to the seller, Mr. and Mrs. Seller, I would like to buy your property, and you give them your offer. And the beauty about this is that there's no rules. You can offer whatever interest rates you want to offer them, regardless of what the average 30-year mortgage rate may be. You can offer them whatever amount of down payments you would like to offer, whatever term length of payments. Like I said, there's no rules, which is the beauty about seller financing. So I highly encourage you to consider seller financing. If you are in a situation where, again, you have maybe one strength but you don't have the other, I think it can be a great solution. Now, with that said, there are some things that you want to keep in mind. Number one, you want to definitely consult an attorney. Because once you have an agreement with the seller, you basically want to go to your attorney and have them prepare a contract that basically, puts in formal letters and protects you what the offer is. You also want to make sure that you hire a title company to investigate any potential liens or debts that may be attached to the property. You also want to make sure that the house has been paid off by the seller. It's pretty rare for a bank to sign off on allowing you to become the new buyer. It's not impossible, but it's typically not the case. So let's just assume that you do get the chance to take over a mortgage. You want to make sure that you have access to the periodic, say monthly mortgage payments, because you want to make sure that the money that you're paying to the seller, well, it's going to the mortgage payments, right? If there is a mortgage balance. So there's something that you definitely want to keep in mind, but it is possible, it's doable, it's been done before, and it's something that you definitely can consider. I haven't seen a formal contract for a seller financing. I, for example, not too long ago helped a seller with selling her plots of land near Miami Beach. We got multiple all cash offers, and that was the only time I saw a section on a standard contract that was written by the lawyers from the Association of Realtors, I guess. But other than that, I haven't seen any standard contract for seller financing, which is why you need an attorney to draw up the contract once you reach an agreement with the seller. But basically, it's definitely doable, and wherever you are in life, in terms of your going after your goal of owning real estate, know that it's definitely doable. Know that you are on your way to it. But it's always great to consult with, for example, a real estate professional like myself, or a mortgage loan officer, so they can tell you where you are in your journey. Maybe you need to do some work on your credit score. Maybe you need to do some work on your getting the funds together for your down payments. But bottom line, seller financing can be a great alternative, and like I said, it can save you a lot of money possibly along the way, because, for example, let's say that you only have 10% of the mortgage to put down as down payments. Typically, when your mortgage down payment is below 20%, banks will charge you what's called PMI, or private mortgage insurance, which typically can range between roughly 0.4 up to maybe 2%. So by not going through the bank, you obviously save yourself a lot of money on closing costs, but also not having to pay this PMI, even if your down payment that you're offering to the seller is below 20%. So the moral of this whole video, guys, is that there's a lot of ways on how you can own real estate. We've already discussed the most common ones: cash, mortgage, but there's also other less common approaches such as seller financing. There's also lease to own, which I will touch up on a different video. So guys, owning real estate is definitely doable, guys. It may not be something that is possible right away, but with a little bit with some planning and clear goals, it is totally doable, and you can do it. All right, guys. Again, I'm a real estate agent, a professional. I've helped many clients across New York and South Florida. If you have any questions, please email me. I'll make sure to leave my email address on this video. And I wish you guys all the best in your journey. Please don't forget to like and subscribe. And thanks so much for watching this video, guys. If you have any questions, make sure to drop them in the comments below, and I will see you on the next one. Thanks, guys. Bye.